To everyone who is joining us from across emerging Europe. I'd like to welcome you to Emerging Europe and the Asian Tigers towards 2030, another in a series of events discussing business opportunities between emerging Europe and key global markets. My name is Andrew Robel, and I am the founding partner of Emerging Europe, an independent, London-based intelligence, news, and community platform whose mission is to contribute to the social, economic, and democratic development of the emerging Europe region by encouraging and promoting entrepreneurship, innovation, and sustainability. Emerging Europe needs to continue to be more visible on the global stage, and our organization helps by shining a light on this fantastic region and the unlimited opportunities it offers through our various programs, the Future of Emerging Europe and our awards, the Tech Emerging Europe Advocates community, our reports, and our news site, which is the primary source of information about the Emerging Europe region. Today, we are delighted to be able to bring Emerging Europe closer to the Asian tigers, or the Asian dragons, particularly to Korea, Singapore, and Taiwan, to jointly explore opportunities and share experiences. Here, I would like to thank Money Today and Drake for the opportunity to be part of the Key Platform Global Conference. In these challenging times, we need to build bridges that will connect and help us build a sustainable future for our countries, regions, and the world. We hope today's bridge between Warsaw in Poland with Seoul is a great start. I would also like to thank our partners, Techia Holding, a global expert in esports, IT services and infrastructure, and real estate development. PwC, our partner across the emerging Europe region, and the Warsaw Stock Exchange, the largest stock exchange in this part of Europe, which less than 2 weeks ago celebrated its 30th anniversary and today is hosting us in its headquarters. I would like to use this opportunity to invite Marek Ditel, the CEO of the Warsaw Stock Exchange, to welcome you all to Warsaw. Marek.
Thank you very much, Andrew. Welcome to Warsaw Stock Exchange. I'm extremely pleased that we have this event today as Korean-Polish relations are at the peak of prosperity. We had 30th anniversary of our exchange this year, but last year we commemorated 30th anniversary of establishment of the diplomatic relations between South Korea and Poland after the fall of communism in Poland. This anniversary shows how close are the ties between Poland and Korea. Korean history is much longer than Polish one. It's few thousand years, but it's to some degree similar to the Polish history. As our president who was a honorary, who had a honorary patronage over this anniversary, and I'm in my second capability, his economic advisor, underlined that both countries live between two powerhouses, and the history of those countries was driven by this neighborhood. And in this regard, we can understand each other very well. So we have to build up our competitive edge in the quite challenging environment, regionally, geopolitically, and so on. So this is, I think, crucial event for our financial markets to get closer, to learn each other better. So I'm extremely pleased to welcome our Korean friends, and again, thank you very much, Andrew, for having this event today.
Thank you very much. So in 2009, global index provider FTSE Russell promoted South Korea to developed market status. Less than a decade later, Poland was also reclassified to developed market status thanks to its continuous improvements in the capital markets infrastructure, supported by the country's steady economic progress. Let me now invite Tae-Jun Lee, the president and the CEO of the Korea Exchange, to join Marek and I in this fireside chat. Perfect. So, gentlemen, like I said, South Korea and Poland are both seen as economic successes. What do you think were the factors, the key factors that contributed to your country's economic success and the success of its capital market? I'll start with our guest in Korea.
예, 안녕하십니까.
Hello, everyone. It is a pleasure for me to be participating in today's talk. In Korea's economic success, I think opening up of our market was a major factor. We were able to increase our exports by opening up our market, and export continuously grew, which led to the success of Korea. And on the capital market success, I think I can explain major factors into three. First of all, we had the infrastructure of the Korea Exchange, and in the Korean Exchange, we not only deal with stocks, but bonds, derivatives, ETP products, and so it is a comprehensive exchange. And we also provide trade-related activities, and we have a IT system that we have developed. And another important infrastructure is index development and market information, in which the stock exchange is responsible for, and this has led to a synergy effect. And we were able to reduce the cost and enhance efficiency. So that led to competitiveness. and we have great IT infrastructure, as I have mentioned. And we did not experience any IT glitches, so we were able to establish trust in the market about our system. And a second factor is that the stock market liquidity is another important factor in our success. For the past 10 years, the market was in a stalemate because the index was within a box, and most of the investment was made by institutional investors and foreigners. But from the mid 2010s, we are now seeing more individual investors participating in the market, and these individual investors have expertise. Also, we are seeing low growth rate in the real economy, and with the COVID-19 situation, we are seeing individual investors entering into the stock market, and they are more aggressive than in the past. This has led to an increase in the liquidity in the market, and KOSPI, the major board in Korea, the daily trading amount was 5 trillion, but last year it was 12 trillion KRW, which was double. And this year has increased even more. And as of April, it is now 19 trillion, one that is being traded on a daily basis. So compared to 2 years ago, it's almost 4 times. And on the IPO market, our main board, KOSPI market, in the past, it was traditionally about manufacturing. We had that type of status, but in the mid 2000s, we gradually, step by step, open the door to more listing of companies. In the past, there had to be certain standards met to allow companies to list on the stock market for the main board, such as certain profit levels. However, for promising companies, they could list on the main board even though they do not have immediate profits. And with this, now we are seeing more forward-looking companies that have a promising future, such as bio companies and fourth industrial revolution companies being included in the stock listing. And we are seeing changes in the market, and which is leading to an improvement of the PER from 13 to 14 in the past, and recently it has gone to above 20.
상승을 하였고요.
Thank you very much. That sounds very impressive.
And
Marek,
furthermore, and we
thank you for now. I'll ask Marek here what contributed to the success of the Polish economy and the Polish capital market as well.
Well, to a large extent, we followed the strategy of South Korea in the early 90s. So we opened our economy quite rapidly. So our companies had to compete with the global peers. And the constant growth of Polish GDP, we tripled the GDP per capita, and extremely fast growth of export, mainly in the manufacturing and tools and machines, led to improvement of the economic standing of Poland. Stock exchange, for our viewers who are not familiar that much with the capital markets, just to give you a perspective, Korean capital markets is 20 times plus larger than the Polish one. So it's a huge success. Congratulations. But we have very similar development in the recent years. We were the fastest growing in terms of trading volume exchange in the European Union last year, 56% plus. We also improved the trading volumes in the first quarter of this year by 47%. So even after COVID, we continue to grow very fast. We are also a full range exchange with all the products President Lee named, everything is there with us as well. We also run an energy exchange, so we are slightly more diversified, and we run it 24 hours a day. So we have a constant trading of electricity and gas and agriculture products. On top of that, the similar developments are down here in Poland regarding the retail investors. Polish capital market in early 90s, after communists were take all the wealth out of the people, were actually based only on retail investors who were illegally working in the other European countries and bringing some dollars, Deutsche Marks, or whatever currency they could convert of French francs, and they were investing on exchange. Then we had a great development of in terms of remote members, as we call them, so foreign investment companies, which gained up to 60% share in our trading volume. But the retail investors still maintain around 10-12%. But last year, the share of the retail investor increased to 25%, which, when you combined with the increase of trading volumes overall, we see that 3 times more trading volume is now created by retailers. And retailers or individual investors are a very important group because they are early adopters. So they are keen on using derivatives, especially futures. We are kind of futures market, and the same was observed in Korean stock exchange, where the futures developed in recent years very, very rapidly. What is, I think, also related to the higher retail participation. So as you see, we are miles away, but actually we have more in common than differences between us.
Thank you very much, Marek. So the role of stock exchanges as change agents, giving investors, issuers, regulators, and policymakers guidance to enhance performance on ESG issues and encourage sustainable investment. This is how we see the role of stock exchanges right now. How do you see your exchange's role in fostering that sustainable growth? The whole conference today is actually focused on ESG and sustainable growth. So how do you see that in your at your stock exchange? And I'll start with our guest in Seoul.
I think that when it comes to ESG and sustainability, we've been focusing on expanding disclosure requirements. And so we've been involved in various different activities regarding disclosure. So last year, we've announced that our commitment to TCFD recommendations, for example, and we focus on governance. We've come up with guidelines on disclosure related to ESG data. And early this year, we also presented a guidance to corporations on ESG disclosure. This is all in line with our efforts to try to foster more of these corporations and listed companies so that they can understand the need for disclosure of information related to ESG, so that we can allow for transparency and more efforts in that regard, so that we can have more information about ESG. And as I mentioned before, we've developed a relevant index that we've supplied to the market on Carbon Effective Green New Deal Index that we've developed last year. And we've also announced an ETF product that is linked to this index. So this could provide some sort of incentive to more companies to participate in active ESG intake. And in a bond market, we wanted to foster SRI activity. So we also installed an SRI segment in our bond market last year. And as a result, together with COVID-19, our SRI bonds, I have to say that the SRI bonds have been issued quite successfully. This year, their listed amount is about 100 trillion Korean won, which is quite successful for us. And as for ESG information, to all market participants, we want to enhance awareness for the market participants on the importance of ESG. So we are actively involved in education materials, training, PR, promotional materials, so that we can tell more people about the importance of ESG in terms of enhancing awareness. And so
for people who present information and the consumers of this information. We want to narrow the gap between these two. And I think that our Korea Exchange has a very important role to play in that regard.
Thank you very much. Marek, how do you see the role of the Warsaw Stock Exchange in educating the market?
Well, educating is, of course, the key thing. So 15 years ago, we started Respect Index, because proportional index, so you cannot build a financial product on that. And 2 years ago, we started our first ESG index in our index factory, in our 100% owned subsidiary GPW benchmark. Basically, what we do, there are two layers. One layer is that we help the companies do the proper reporting, our issuers, the proper reporting, and we cooperate with the European Bank of Reconstruction and Development, EBRD, on these guidelines. And those guidelines are now being presented, and there are some webinars for the companies. And there are even some templates of documents to make the life easier with ESG. And on the other layer, we try to explain to the regulators, policymakers, that there is a peculiarity in the ESG in case of Poland, as of course, when you look at our top ESG companies, you have mainly gaming industry, as we have over 60 companies in game development space. So actually number one in the world in terms of number of companies. And we have some, one financial or two financial institutions and some retailers. But obviously in the top ESG ranks, we do not have any companies which are manufacturer or there are energy generators. And Polish industry or power generation is based on coal, and it won't change that quickly. Of course, the plan is to get out of coal in about 30 years, but currently all the e-commerce, gaming, and so on, they consume energy, but they have much better ESG ranking. So they have ceteris paribus cheaper access to capital or weighted cost of capital decrease for them because they are more ESG friendly. But actually, the greatest contribution to the improvement of our environment decarbonization have the energy power generators or manufacturing companies, which have lower ESG score currently, so they finance themselves via equities or bonds, more expensive. So it's a completely ESG paradox, which we try to explain to the investors, to the regulators, as I mentioned. And what we created now is the narrative around ESG best effort. So we try to promote not only ESG, what is of course e-commerce tech space, what is great, or gaming and this kind, but we would like to promote among the investors those companies who have highest delta, so highest change, highest improvement in their ESG capabilities, and we reach quite this message is quite well received. We reach quite wide audience to that, and hopefully we will help our economy to transform, to become more green and companies more socially responsible and with better governance by promoting ESG best effort.
Gentlemen, thank you very much for this chat. Obviously, there's a lot that has already been done to improve the application of ESG frameworks, but there's still room for improvement, and we need to continue working on that. We are going to continue the topic of ESG right now, and I would like to hand over to Kasia Madeira, a news presenter at the BBC, and her panelists representing PwC in Central and Eastern Europe, KB Financial Group, Gazelle Finance, and Sungsil University. They are going to focus on, again, the application of ESG frameworks in international trade and investment, and they will continue discussing opportunities for the emerging Europe region and the Asian tigers. Kasia, over to you. We should be joined by Kasia anytime soon, so bear with us, please.
Hello, a warm welcome. I hope you can hear me okay, and it's lovely to be with you today at this opening session of Emerging Europe and the Asian Tigers looking towards 2030. A huge thank you to Andrew, Emiliano, and the whole Emerging team for bringing us together for this part of the Emerging Europe's Towards 2030 programs, which are promoting sustainable trade and investment relations. And I've got to say, that was a fascinating fireside chat with Jiwon Jung and Mary Dietel, really insightful. And I hope that our next session, in which we're going to be looking at, of course, ESG and its application in economic relations between the Asian Tigers and emerging Europe region, will be just as thrilling. So I'm very pleased that we are joined today by Agnieszka Gajewska from the PwC, Public Sector and Infrastructure Leader for Central and Eastern Europe at PwC. Jeffrey Liebert, the CEO of Gazelle Finance, Daewoo Lim, and actually it was going to be Jin Young Kim, the head of brand ESG group, KB Financial Group, and Professor Hyo Xiang Liu, which is, I hope all of my guests, I hope everybody can hear me. It's always really difficult when we're doing something across so many different platforms and so many continents and in fact time zones. So welcome to you all. I wonder, Professor, if we could start with you, in fact, because when we talk about these two parts of the world coming together, we heard about how the economic and the financial structures of Poland and the Asian Tiger economies were very much growing and developing. I wonder if you could just give us a historical insight into what brings these two different parts of the world together, and then we can open it out to the rest of our panel.
Hello.
네, 한국에서도
In Korea, recently, ESG is being discussed a lot these days. And in Korea, we have something slightly different from global standard ESG. We have some efforts of trying to have frameworks separately for E and S and G. It is for investors to reduce their risk and for them to have long-term investment. However, in Korea, it is not an investor-centered aspect. It is from the company's perspective. It is being used as a concept similar to CSR. And because of this, there is some confusion for the companies. And therefore, companies consider ESG similar to corporate responsibility. And therefore, there are some viewpoints from the companies viewing ESG from corporate social responsibility. That is why it is different from the investor's viewpoint. And in Korea, we have the chaebol system, which are large conglomerates in Korea. And for large conglomerates here in Korea, they have not resolved their governance issues. So in governance part, ESG in the ESG governance is taking a big portion. And these large conglomerates are talking of ESG similar to CSR, and we have participants today from the financial sector. So for investors, we need to set to the right direction, and investors are trying to do so. But in Korea, we have some mix-up of the concepts of CSR and ESG and large conglomerates. They have created separated departments for ESG. They're trying to set up standards, and Europe is leading in this area. Therefore, in Korea, we're trying to learn from the system of Europe.
Okay, Professor, thank you so much. That was a fascinating insight. And Agnieszka, I want to bring you in on this. I hope you heard everything from the beginning, because I know that Jeffrey, you had sound problems, but you're back with us now, so that's great. But Agnieszka, when it comes to that kind of misunderstanding and that lack of that maybe slight confusion between what the purpose is, as the professor was outlining, it's much clearer in emerging European countries as to what ESG is all about, I'm assuming.
Hello, Kasia. Good morning, everyone, and thank you for inviting me here. I hope you can hear me. You're nodding, so I see that you can. That's great. Listen, I think as much as there might have been the confusion of what is ESG, what is CSR a couple of years ago, I think right now in some countries of emerging Europe, especially for those who are part of the European Union right now, this confusion is definitely gone. If we're looking at what is going on right now with the European Green Deal, with the huge changes around regulatory environment, especially last week after the Earth Day, when the European Commission put these regulations as part of the European law, I think we have like a very, very clear view of what is going to be expected. Especially in the 11 countries of the EU. But I would say we are already observing, and what the professor was referring to, a spillover effect. So actually what the European Commission is looking for right now, and is going to be the requirements for the European companies, is also having a spillover effect on the supply chain pretty much everywhere. Don't forget that, especially when we're talking about the greenhouse gas emission and reporting on this, some of you will remember that actually we're talking about 3 different scopes. So it's about what you are producing, but also very much in the so-called scope 3. We're talking about your pretty much entire supply chain. So it's not only what you can control, but also what is coming as part of your bigger ecosystem. That is why my thinking is, as much as we could have thought about some sort of a confusion, is it just about the glossy reports of how many plants have we planted last year? No, it's not the case. Right now, we're talking about the real commitments and real reporting requirements that is coming our way, and it will have a very big impact on pretty much everything that we do.
So it sounds it's very concrete measures then. It's very specific, it's very targeted. Thank you, Agnieszka. Let's bring in Jin Young Kim. Now, you're head of brand ESG group for KB Financial Group. So I'm assuming there's no, in terms of your company, there's a very clear outline as to ESG. So talk us through how your company go about advising and encouraging other companies to follow the ESG line. And I wonder if like me, you were watching President Biden. I was broadcasting last night as he was giving his first address to Congress, and he was talking very much about job creation and green job creation. How important is that in terms of what you're advising and how you see companies going forward? Jin Young Kim.
I can say that KB Financial Holdings, first of all, our holdings company is the largest financial holdings company in Korea. And last year, we were the first financial institution in Korea to announce going carbon neutral and going post-carbon and decarbonization. And within the board of directors, which is the highest supreme decision-making authority, the board of directors agreed to form a ESG department, which answers directly to the board of directors. And so that decision-making process is done right there at the board of directors level. And so we've been very active in joining different related councils. There are about 30 million customers that we deal with, and we create green and eco-friendly products for many of our consumers and customers to use. In Korea, I have to say that the concept of ESG has not been completely rolled out yet. It is not being completely applied in different sectors. And as you know, as a banking institution, we try to allow for a good flow of capital to have help companies invest in different resources that they need to grow. But I don't think that we are quite there yet, because we don't really have what we call a K taxonomy. We don't have an actual classification system or a taxonomy system. And I think that is still a big challenge for us. And last year in 2020, together with UNEP FYI and the European Financial Association, we participated in the working group to come up with a European taxonomy. And did some research on developing these guidelines. And the reason we participated in this is because we wanted to learn more about the European taxonomy development process, because as we know, the EU is a leader in this sector. So we wanted to try to see how that can be applied in the Korean context. I know that around the world, there needs to be some shared understanding of some standards, I guess, especially with the fact that this is an emerging market. So with ESGs, we need to come up with some universal standards that can be accepted everywhere. So for example, if we were to develop some standards here in Korea that are too strict, for example, for investment done in Southeast Asia or some other countries that are still developing, that could be seen as too strict for them. It could be seen as too much of a hurdle. So for us to be too strict early on when it comes to the ESG process, we want to allow for a soft landing, to allow for wide universal adoption of ESG standards, and maybe provide some incentives and benefits to those players who are doing a very good job with ESG. So with these positive benefits, instead of going negative, some sort of a positive incentives to try to allow for more growth and developments with the emerging markets. And as for job creation, with green job creation specifically, at KB, we are looking at two things in particular. The first is to support startups and support social impact enterprises, new businesses that want to create some sort of social value, especially young entrepreneurs. We have created a separate startup center to provide consulting services and assistance to these young entrepreneurs, provide funding if necessary as well, to provide them with some sort of assistance for their success. And secondly, the other thing that we're doing is we have we also have an expo. KB organizes and hosts an expo, a job fair, if you will, that we've been doing for about 10 years. Every year, about 20,000 job seekers come and they successfully find gainful employment through this job expo. And so in the future, we want to expand our outreach to immigrant laborers seeking jobs, North Korean defectors who have escaped North Korea to come to Korea, or immigrants who've married into a Korean spouse, who've married a Korean spouse. When they find employment, then they could work together with us. And also we want to work with many of our partner companies who are especially very committed to ESG. We want to sort of liaison between these young job seekers and those companies.
That's a fascinating insight. Jin Young Kim, thank you so much. That's really interesting to hear. And I want to pick up on a couple of those aspects with Jeffrey Liebert, CEO, Gazelle Finance. Jin Young Kim mentioned this importance of everybody working out their priorities, their criteria in a similar way so that people aren't running ahead. And I guess also in light of the global shared experience of COVID, and I know a lot of your clients have had, as most companies and most individuals have had personal experiences of this devastating disease. But I wonder if you could just express the kind of the advice that you give, and also the importance for us to come together and have the same kind of criteria as Jin Young Kim was talking about when it comes to trying to bring people and bring different parts of the world together.
Great. Thanks, Cassia. So Gazelle Finance is a private equity fund manager that invests in the Eastern Partnership countries. So it's really the frontier market countries of Europe, on the edge, the former Soviet Union countries that are just right on the axis between Russia and Eastern Europe. And we're certainly sort of at the sort of spearhead of pushing the boundaries of bringing ESG practices to these companies, because when you're a 4,000 GDP per capita country, you're making trade-off decisions. When you're building out your working capital strategy, your investment strategy, are you going to take the same actions that you're going to take as required by an EU country? So those are trade-off decisions. But I can tell you that for Gazelle Finance, what we're able to do is turn sort of ESG into an opportunity. And in fact, I would say it's often an incentive, and it does filter out the great companies from the less great companies, the companies that want to have institutional capital, that want to improve their governance structures, that want to, have better approaches to labor practices and environment as well. And so then, if you look at us, most of our investment capital is what is often multilateral and bilateral capital. So we have in capital from Dutch investor FMO and in the United States, DFC, formerly known as OPIC. And so they have standards, and there's no doubt that those standards are not always consistent across each other. And so what we have to do in those circumstances is take the most aggressive one and apply it to all, right? So, I wish that standards could be standardized. And I think this is always a dynamic that's been going on and often led by a lot of the multilateral institutions. But it's a constant game of trade-offs. And I've seen this happen in the clean tech industry before ESG became so big. And, what is clean tech? How do you define it? And we're going through that as well with impact. So these what often happens with things like ESG is they get co-opted. And certain companies say they're doing ESG and they're doing it at a lesser standard than others. And you end up having, it ends up taking the brand of ESG investing and actually diminishes it to some degree. I don't know if there is ever going to be a mechanism that you can unify every country and every investment platform and investors and recipients of investment capital to take a completely standardized approach. But that is something that I think is an issue that has to be constantly focused on, because ESG to Blackstone is different than ESG to Gazelle Finance, and it will always be different, just given the scale of the way we invest and our strategies for investing.
I wonder, in that case, Jeffrey, thank you. And I just want to say to everybody watching, this is such a unique opportunity. We've got two different continents talking to each other about something so incredible coming together. If you've got questions, please do share them. I've got lots, but it's up to you guys to also get involved and get your questions through to this esteemed panel of experts. But I wonder, on that note, from what Jeffrey was saying, Professor Hyo Sang Yu, if I could bring you back in, because you touched upon this when it comes to Korea not having a complete one understanding of ESG, and now we're talking, and Jeffrey's talking about across different continents and never a homogenized understanding of ESG. I wonder if you could just touch upon the points that do bring these two, I guess, culturally very different but economically fast growing and aspirational parts of the world together. What does bring them together, and so what can we aspire towards in the future?
So ESG in advanced countries, in Europe and in the United States, it has been a long time since it has been introduced. And so for Korea and Asian countries and Eastern European countries, it is taking some time for us to fully understand ESG. And the advanced countries, it is misunderstood in some areas that ESG is being used to colonize emerging countries, and that it is creating an unseen tariff barrier. And some are even considering ESG to be an oppressive concept. Therefore, we need to balance out the speed, and we should not use sticks but rather carrots as we try to create a consensus of ESG. And we need to create an environment that enables us consensus making. However, it seems that some advanced countries are speeding up ESG efforts, and I think some panelists did mention this, that countries around the world, including Korea, and in particular, because of COVID, the supply chain is being disrupted, and Korea is a country in which businesses are utilizing supply chain for their business, and Korea and developing countries need to be included in the supply chain. And if it's such ESG regulations are provided in a short term and we have to make changes in the short term, it might be perceived as a barrier. Therefore, we need some efforts for consensus building, and this needs to be a prerequisite.
Professor, thank you so much. Agnieszka, let's bring you back and talk about these trade barriers. How strong are they? Are they something that are tangible when you're looking at this situation? And also, I wonder if you could bring in this idea about labour flow as well, because that's something that is important for these particular nations. And yet, of course, with COVID, as Jeffrey has touched upon, with COVID, it's just been a huge impact on what we would normally expect to see.
Oh yes, big time. I will cover this, Kasia, but maybe I will refer back to our panelists about the taxonomy, about a different understanding, and it is an absolutely fascinating discussion, I must tell you. I want to refer a little bit to greenwashing and actually how much we need this common measures to be able to actually assess what we are dealing with. We've been there. It's almost like if we're talking about not having something that is broadly understandable the same, I think we will be in the circles. So if we want to really get carbon neutrality, if we're talking about the European Union becoming a neutral continent by 2050, if we're talking about China being the same by 2060, clearly something needs to happen. And I work for the consulting and also the audit company, and we always say that what is not measured and recorded is not done. So from this perspective, we do need to have some common denominators about what we really understand as green. I will refer maybe to have a segue to the trade right now. That recently we were looking at a fascinating EU report from January 2021 that said that 42% of companies claiming being green or products being green are either exaggerated, misleading, or simply false. 42%. So my thinking is we can discuss about how much each country, each company, each individual can contribute, and that's why the Paris Agreement, as you all might remember, is focusing on the nationally determined contributions. So the countries themselves are saying how much they can contribute to the transition. So I'm a great advocate for having it as unified as possible, but of course I agree with our panelists that there is like a huge work to be done about the data analytics, about understanding, and also about some sort of a debate and the consensus that we need to reach. Now, coming back to the trade, let me again maybe refer to the EU. Recently, in January, our EU Commissioner for Trade, Dombrovskis, was talking about the new trade, new EU trade strategy, and the strategy was broadly about two things. One is really the post-pandemic recovery and how much it is needed, how much we need to trade to recover from. And the second thing was about Paris Agreement and the contributions there being an essential element of the new EU trade deals. This sends a signal, yes. So it shows that actually we will be taking it quite seriously, and we're talking right now about the rule-based trade. So if we want to have a trade with the European Union, it needs to be green, it needs to be digital, it needs to make sure that somehow it supports the EU EU strategy around it. So I think it will have quite a significant impact on how we are doing trade, how we are dealing with WTO, how the trade agreements are going to be shaped in the future, and also how is it going to be monitored. Now, I know that, from this ESG, I always have a tendency to covering this E part, and very rightfully, you, Kasia, asked about the S and G part, so especially about the workforce flows. Clearly, working with our clients, also seeing what is going on right now within PwC, we are talking about totally different work after the pandemic, and the workforce flows has been stopped quite significantly. This impacted lots of businesses, but I would say in general, especially when we're talking right now about emerging Europe and Asian countries, I think we did relatively well. So as it comes to hybrid working, as it comes to remote working and so on. Clearly, the vaccination program and how quickly is it going to proceed in all the countries will have a huge impact on how quickly we are going to go back to the new normal. It is not a coincidence that the name of our panel is to build back better together. So maybe better together also means slightly revised working environments and working models. So I do hope that the post-pandemic situation will bring also lots of new opportunities for having a more innovative and modern way of working and cooperating.
Agnieszka, thank you. I was worried actually to hear about how there's a lack of that percentage that you said, that there's a lack of confidence in ESG, and it was quite staggering to hear that. But just let's bring Jin Yong Kim in on the point of building back better, because yes, as Agnieszka very rightly points out, that's the aim, the theme of the conference. So let's talk about how post, we say post, of course, we look at what's happening in India, for example, and it's the country very much gripped, and our hearts and prayers go out towards the people there. But we've been so gripped in this pandemic. Jin Yong Kim, how do we then come out of this and genuinely build back better and work together, and also build confidence so that people do believe in, and companies do believe in greener and a better and a more transparent way of doing business and building the economy?
So I think I did touch upon this earlier on in my earlier remarks, but ESG, I think the best way for us to approach it is a phased approach. So not all at once, but going in stages. Because of the pandemic, I think many people have come to the understanding that climate change is a very big risk, that we have to respond to it. But if we look at Africa, they take up the entire continent, only takes up 4% of the global carbon emissions. And if we were to apply the same standard, uniform standard to Africa, that we would impose in other countries or other regions, then Africa will not develop very much. So when we look at carbon emissions, we also have to look at development, and we shouldn't just blindly apply the standard of advanced markets like the European markets into all markets. So instead, we should try to take a phased approach. And in Korea, we have this word called MZ generation, the millennial generation. So people born in the early 1980s all the way to the 1990s. So these are young people who are in the 20s to late 30s or so. So they are typically called in Korea the MZ generation. If we look at their consumption patterns, we call them the green consumer. So these are people who are already very woke. They are conscious about green purchasing. So they don't just blindly buy whatever brand that they think is great. They are thinking consumers. So they look at fairness, human rights, eco-friendly, animal rights. So they're interested in all of these different areas when they go into consumption. So we have to be mindful of their consumption preferences, and they are this new target audience in the market, and this means that many corporations, many companies will see opportunity in this target market. In the post-COVID world, I think that this new target audience, and with these new different emerging markets and countries that are developing as well, I think that these different players will get a new opportunity to develop further in the post-COVID era. And as for ourselves at KB Financial Holdings Company, or Financial Holdings Group, we will also do our best to provide good funding to these players.
Thank you so much. Well, let's pick up with Jeffrey on some of this, because I love that idea, the MZ generation, that they're so woke and they understand what they're doing in terms of they look into stuff. They just don't go blindly, say perhaps our slightly Jeffrey older generation, let's be kind to ourselves, but this younger generation is more understanding of what it wants, and they're more demanding ultimately, as Jin Young Kim was suggesting, was implying. How do businesses in that case adapt to that to ensure that they're socially investing and adhering to that kind of drive that this MZ generation is taking us?
Well, I agree with Jin Young that I don't think one size fits all, and it goes back to your original, question about standards and how do you apply the standards. And I think there's always going to be gradation and heterogeneity on the standards. But ultimately, whether it's KB or it's Gazelle, we have to be not just reactive but proactive about trends in the marketplace. And so, the future generation, the MZ generation, those are the future consumers that are driving consumption for the businesses that we're supporting, right? And there's no doubt, and I go back to my original point that ESG is can be built into a benefit to businesses if done right. I mean, if you look at governance, for example, you want good governance in your portfolio companies, whether KB is investing in a company or I, as a private equity fund, are investing in a company, because I get better performance from better governance. And I have better risk mitigation if they're not doing stupid things environmentally, because if there's a major oil spill or something like that, I mean, you saw in Russia with the major oil disaster, or it was actually a mining company. It's a major disaster, and you don't think of Russia being as innovative on ESG, but that company has major issues now with the government because of that. So risk mitigation, it makes complete sense. And so if you look at the end consumer, which is the word woke means many things now in America. It's kind of a crazy word, but a new generation that expects more from its companies and building a brand around proper ESG standards, whether it's environmental, social, or governance, you're going to sell more product, to that generation. I do think it's a complex issue when you start talking about countries like Africa versus the frontier markets that we're dealing with, and the trade-off decisions that are being made in terms of, are you going to generate energy from coal, gas, or renewable? And I don't think it's an easy answer. But I do think that if you are a consumer, and you are getting per GDP growth that's occurring, and you're going up the chain of value, and you're starting to generate more wealth and wanting better things, you start being more aware of where those products come from and what those products represent, and becoming more conscious of it. So it depends on how far you want to get ahead of the curve. And there's going to be certain companies that are going to be ahead of the curve. They're going to serve those expecting youth. That's going to be the future market driving consumption, or you're going to be behind the curve. And I think those companies that are ahead of the curve, ultimately for the long term, will be rewarded. And then I think it becomes an issue of shareholders and stakeholders. Shareholders, with short-term perspective, driving quarterly returns versus those investors that can take a long-term perspective. And I think guys like, Tesla and Elon Musk have proven that if you have that long-term perspective, you can absolutely change the market. I mean, electric cars was nothing. And now look where we are. And it was because someone had a long-term strategy. and it moved all the major players. I mean, how did one company move an entire market when all the major automotive players didn't move the market? And so I think you're going to see that, going back to your point about the MC generation, that those companies that are going to take that long-term risk are going to be the future unicorns, right? And those are the companies that are going to really generate value, long term.
Jeffrey, some fascinating points. We need a couple of days to discuss all of this. There's so much to talk about, but let's get Professor Hyo Seung-Lee back in on this, because when Jeffrey's talking about governments also being involved and talking about risk mitigation, and the forward-thinking companies as well. Just are there any companies in your mind that you already see being those forward-thinking ones that are ahead of the curve, as Jeffrey was mentioning? And also, I wonder if you could just throw in from your kind of the academic point of view how important it is for governments to be on board with this, and when it comes to Southeast Asia, how are those governments doing? Are they on board?
So unfortunately, when it comes to that issue, at least if we look at the Korean context, I cannot think of any model cases right off the top of my head, because in Korea, the Korean industry, I think that we are heavily oriented towards chaebols, these conglomerates, and that's how we achieve these rapid industrialization and rapid economic growth. So in fact, governance is actually a challenge for many Korean groups, big Korean conglomerates. But as mentioned before, in the United States and Europe, when we talk about ESG, people think about the environment. In Korea, when we talk about ESG, many Korean market participants say that we should begin by fixing the governance issue, because we haven't fixed the governance issue yet. And then after we fix the governance issue, we can go towards the social issue and then move on towards the environment issue. That is what many of the market participants in Korea are saying, at least when it comes to ESG. But as you know, the governance issue is not something that we can resolve overnight. It's going to take some time. But I can say that in Korea, we've seen a very vibrant a very vibrant startup space. We're seeing a lot of unicorn companies. And these young, thriving companies have very good relationships with their customers and with their investors. So I do think that there is going to be change in the Korean market, definitely. But at least for now, the ESG market is still emerging. So as you've said, the global companies all have different ideas and understandings about ESG. So the concept itself is still in its initial stages, and that's why people have different ideas and different understandings about ESG. So I hope that we can have more of these conferences and discussions so that we can have a consensus about what ESG really means for all of us. And based on that, we can take a step-by-step approach and a long-term approach towards the future. So to answer your question, unfortunately, I can't have any good examples now, but maybe next year or 2 years' time, I can tell you more.
Well, let's put a date in our diaries immediately and get another conference underway. Professor, thank you. So Agnieszka, in terms of these future unicorn companies, especially with Poland, and the government there is quite interesting, because the country historically very coal-based, as that part of the world has had a history with that kind of industry. How is that part of the world now looking in terms of the way the governments work in supporting companies, or perhaps not, when it comes to ESG?
Well, for this, we definitely need another conference, but let me just maybe give you a little bit of overview of what is going on. Clearly, we are part of the European Union. Clearly, we are part of a European Green Deal, and clearly there is lots of tension. And it's not only for Poland, there's, similar situation in Romania and in a couple of other countries as well. Not to talk about, Russia or the stance. Yes, this is the situation that definitely needs to be taken into account. I would say it is not a coincidence that as part of the whole European Green Deal, you have something that is called just transition plans and just transition fund. It is quite obvious that the countries, the regions who have been coal dominated in the past will have challenges connected with the transition from coal. And that is why lots of conversation right now with various stakeholders within these regions. And I know it, for a fact, because we as PwC are working right now in 6 different countries, and if I remember correctly, 17 different regions, helping them to understand what it really means, and how to make sure that this transition from coal is as painless as possible, but also to some extent to create the opportunity. Because closing the mining, as scary as it feels right now, creates also the opportunity, especially with all the funding that comes behind the European Green Deal, and hopefully also from our local sources. And it will mean lots of opportunities around digital innovation, open data, and everything that comes with it. So lots needs to be done by the governments and also by the different stakeholders around the upskilling, around really looking what will the new workforce needs will look like, and how we need to educate young people, but also how to effectively re-educate and upskill the workforce. I would, you ask about the companies and the unicorns and how it looks like right now, and my thinking is that I working when I work and advising our clients on the regular basis, I really see the needle moving right now. And it's whenever we have an M&A transaction, someone is selling something, and there are potential buyers. We do talk about the ESG, and the professor was very right. It's not only about the E, it's also very much about S, and so much about the G. So once we're having the conversations right now with a potential buyer, for example, there is evaluation, there is the whole due diligence process around the ESG, and trust me, if we have a potential seller, the seller who is not able to have a proper conversation with potential buyer about their ESG strategy going forward, it is a very big risk issue. So this is something that definitely is changing the way how we are looking at the company, how we evaluate them, and more I'm seeing this ESG part as value creation opportunity, not only as a stake and the reporting requirement, but and I think it will continue this way.
Okay, Agnieszka, thank you so much. And I want to, seeing as Emerging Europe has created and brought us all together, I wonder, Jin Young Kim, if I could ask you and put the question to you, how much is Southeast Asia genuinely looking at the emerging Europe part of the world in terms of business, and in terms of conversation, and in terms of sharing ideas, and hopefully sharing platforms and ideas for bringing a cohesive ESG understanding? Is this something that you're increasingly seeing when it comes to the companies that you're talking to?
As KB's global partner, we are entering mostly in Asia and Southeast Asia at the current stage. And for IB, we are in Europe and in the United States. And if you look at Korea, we have a export-oriented business structure, and that is because of this, we enter into markets such as Southeast Asia with low labor costs in Southeast Asia, and we manufacture there, export to other countries to gain profits. But after the pandemic, we are seeing reshoring becoming a major issue, and emerging Europe, or Europe that has environmental friendly infrastructure, this might be an option in the future. And so there is increasing interest in emerging Europe because of their infrastructure, and investing in companies that will invest in those areas. That is something that we will proactively consider. emerging Europe and Asia, I believe, will have similar issues, and that is lack of transparent information. So, can there, for example, financial information, when we make investments, we see the business reports, so we can review that. But for non-financial information, we have no way of knowing unless that company discloses that information. I don't know the current situation of emerging Europe, but for non-financial information too, if we could see more of that information, and if such information is provided in a transparent way, I think this can encourage more investment in emerging Europe and also in Korea too. I think this is a very good opportunity, and for our company, out of ESG, a big concern is the gender equality. And I think this is a common factor of Asia because above team level, we only have 30% female employees. And when we receive assessment from global authorities and organizations, we get the lowest point for gender equality. So we need to increase female executives and manager level employees. And so we really have a far way to go in terms of improving our ESG. And the professor talked about governance issue is still in Korea, and for KB, we have good governance, but for us to become an even better company, we need to increase gender equality, and we need to increase female representation in the decision-making bodies.
That's absolutely fascinating, and I have to say
that we
it's
have good
wonderful
governance.
to hear you talk about gender equality as well. It's something that was touched upon by President Biden in his first Congress address, and it's something that I'm very pleased to hear that you're picking up on as well, because you've got half of the population as a workforce, and so it's important that they get paid equally. We are running out of time, so before we, as Agnieszka said, we do need a whole another day of conference to talk about so many fascinating topics. But for the time being, I want to thank my esteemed panel of experts: Agnieszka Gajewska from PwC, Jeffrey Liebert from Gazelle Finance, Jin Young Kim from KB Financial Group, and Professor Hyo Sang-ri, who very kindly started us off and kicked us off on this fascinating discussion about building back better together and applying ESG frameworks for international trade and investment. Thank you so much all, and Andrew and the team at Emerging Europe, thank you so much for facilitating this conference, and I hand back to you.
Thank you very much, Kasia. It was great to hear all of you in different parts of the world. Today, I was really interested in that part related to standardization, especially when it comes to cultural differences and the level of development. Now, last year, I had the pleasure of joining one of the sessions at the Key Platform Conference online, and we were expecting that this year we would be able to actually meet offline. Unfortunately, the situation is slightly different. The COVID-19 pandemic has exposed a lot of different challenges, showed a lot of different challenges, and exposed the healthcare system's shortcomings and vulnerabilities in a number of different geographies. Maintaining and restoring health while minimizing negative impacts on the environment and leveraging opportunities to improve it is a clear post-COVID goal. In the next session, we're going to discuss the future of healthcare and how it can benefit from AI, from big data and other technologies, and how the Asian Tigers and Emerging Europe can join forces to contribute to the global healthcare and health tech scene. The next session will be moderated by Samuel Burke, a CNN technology correspondent and a news presenter. He will be joined by experts from EIT Health InnoStars, Taiwan AI Labs, Health Tech Lab Serbia, and the Hallam University Medical School. Sam, are you already with us? If yes, over to you.
Andrew, I hear you. Hey, Andrew, very good morning from London. Very excited to connect like this. Once again, it's been an incredible time for those of us covering these events, but especially to contrast what's happening between Asia and Europe, between emerging Europe. The successes that Asia has had, many of us are envious of, but we're looking for ways now so that we can collaborate with each other. So, Andrew, am I ready to take it away?
Yes, go for it.
All right. Well,
Thank you.
I would like to start right away by getting to the guests that we've had and start to talk about some of the questions that we've already been receiving, but also to open it up to you, our audience. At any point today, you can send your questions and I'll be answering them and having our panel answer them. I want to start by introducing everybody right now. We'll go through and start with Balazs Fouriers from InnoStars. He's the Director, EIT Health InnoStars. We also have Ji-Suk Chon, a professor from the Helm University Medical School, and Ethan Tu, the founder of AI Labs. And lastly, Tamas Bekasi, RIS Business Creation Manager at EIT Health InnoStars. So I just want to let you guys know exactly what the format is here. Feel free to interrupt each other. Let's keep it just like a conversation would be in real life. No need for all the pleasantries. I want to start by asking, what are the biggest health takeaways thus far? I mean, it's been a very interesting time. There's lots of we've learned, you could say somewhat obvious about telemedicine, but I'm interested in terms of big data, in terms of AI. What are some of the biggest takeaways? Tamas, I want to start with you.
Hi, everyone. Nice to be here. So yeah, whenever we are talking about telemedicine or AI or any type of big data-driven solutions, these are, first of all, these are not new. So whenever we are talking about, and it's really hard to tell something positive about COVID, but if we want, of course, we can highlight the fact that healthcare innovation and healthcare itself became a more popular topic within the societies than ever. So that's a little bit triggering how not just the society, but also healthcare institutes are reacting for new healthcare innovation, because right now, of course, continent by continent, it's a little bit different, but we are living in an era where we have tons of actually innovations also coming from healthcare, but on the other side, institutes just partially utilize these kind of innovations, and this kind of fluctuation from the creation of innovation and using the innovation is a little bit more highlighted in this kind of COVID era. So personally, and also EIT Health, we are expecting a new golden era for healthcare innovation from now on, but of course, which is always appearing as a risk in every type of golden eras. Also from the investment point of view, we need to be careful with the too much optimism. So we need to highly evaluate all the kind of healthcare innovation projects in order to reserve this kind of golden era for a long time, because definitely we need it.
Can you give me a little specifics about what you mean too much optimism? Is there a specific area?
Yeah,
I mean,
sure.
Here in the UK, I can say, even though it was very successful in Asia, contact tracing just really didn't work, nor did it work in the United States. So that's one obvious one to me. Tamas, something less obvious? Can you drill down on that a bit for me?
Yes. So just as a general background, so of course Europe, compared to Asia or compared to the US, from investment point of view, I mean the volumes and also from the time to market perspective, it's still a little bit slow. But if we are just thinking back, so we all remember the Terranos story coming from the US, how the optimism or any type of reliability towards biotech products actually drill down because of the fact we all know. So actually, what it made a fallback from the investment intention, because of course in many cases investor became less optimistic or less kind of trustful towards these kind of projects. And now because of COVID and now because of the healthcare innovation golden era, investors, after just a short period of time when they become a little bit more conservative, they start to open wide towards these kind of projects. And whenever I'm saying too much optimism, it's meaning that now investors see a big potential in healthcare innovation, and sometimes they don't have the background to evaluate or measure these kind of projects on a professional level. Therefore, they're investing a lot, And if they found these kind of investments kind of fail at the end, then it can make another fallback, like we sensed in case of Theranos. So we need to be careful. Also, investors should, in my view, should involve professional institutes in the measurements and evaluation of these kind of projects. And of course, we much more than enjoy to have more investments within Europe for healthcare innovation, because at the end of the day, this can really accelerate these projects to the market. So we need to be careful with our optimism, but the good news is that we can sense optimism from the investor side.
That puts it into context. Thank you for that, Tomas. Ivan, I want to welcome you to the conversation. I'm interested, what are some of your key takeaways about the future of medicine now and the future of technology in medicine in the context of the pandemic?
Thank you so much. Good morning from Belgrade first. And I would like to say that the vaccines are the solution, but they're not enough. And we have discovered that. So there are plenty of time and efforts that have been done before the vaccines appeared. And I would like to stress on the community and everything and the involvement of everyone from the community. I can talk about our own example from Serbia and Health Tech Lab ecosystem, where all the engineers, designers, doctors were involved in producing solutions in order to save lives until the actual vaccine arrived. In terms of multiple hardware and software solutions, in terms of
tell us about some of them. I'm interested to hear. You can go into some detail right away.
Definitely, yeah. So there were multiple respirators that were actually hands-on produced in Serbian ecosystem. There were several instruments that were actually clearing up the air in hospital areas and then in homes. And there were several actually solutions, apps that were actually detecting or calculating people that were, let's say, more than 10 gathered in certain place. So actually the transmission would be avoided and so on. And we're very, very proud about all of the solutions. Innovation Fund also funded around 12 different solutions that were actually implemented during the quarantine and so on. So we are actually very happy to see that there is actually this kind of empathy and where people even from different kind of technologies that were not focused on health tech were in that time refocusing on health tech and actually assisting in these moments. So this is also another takeaway that besides the community, the empathy and inclusion, it's really crucial. And I think we've showed good results in our own community and I would say also worldwide.
And of course, while so much of the media attention has been on places like the UK, like the US, which have advanced so quickly with the vaccine, there are so many countries where the vaccine is really a 2022 at best story. I want to go now to Ji-Suk Chon. You're the professor joining us now on stage. And I want to get your sense of what some of the biggest takeaways are over a year into this pandemic.
Thank you very much. It is a pleasure to meet the other panelists. In the beginning, Korea was successful in its quarantine, and the biggest factor was in 2015, we experienced a similar disease, a pandemic, and we made preparations in 2015. There was the MERS, the Middle Eastern Respiratory Syndrome, a MERS, a patient came to Korea and a couple of people died. This led to a shutdown of hospitals, and also our society almost came to a halt, and the economic loss was 12 trillion Korean won. And after that experience, we made thorough preparations, and I am a pulmonologist, and I also worked as the Korean CDC, and at the time we worked on tracing. what we were not good at and in tackling MERS was because of the Personal Information Act, and because of MERS, for a couple of months, the economy and society almost came to a stop. And so we realized that a national economy is more important than personal information, and that was a consensus that was brought about due to the MERS experience. And so when a disease spreads, we were able to trace contact more easily. And when I was at KCDC per year, and that was when there was MERS, and the patient came into Korea, and we would have to identify the patient, and we did a tracing of the contacts, and if necessary, treatment was done. And KCDC at the time earned some knowledge, and it was when you go to the patients, you have to trace the contact. In some cases, they do not tell the truth. And so when asked about who they met and where they went, you use their credit card information for the tracing. And almost all Koreans have mobile phones, and so we can use the GPS system to trace their mobile phone location, where they moved based on their mobile phone location. And many Koreans also have transportation cards, and we can use the transportation cards to trace where they went. And CCTV surveillance cameras could be used, and we had experience for a couple of years due to MERS, and so we were well prepared. And so that is the beginning of our efforts.
Well, I want to use that as a bouncing off point for the next question. Ethan, I'll be interested to get your perspective, but I just want to pick up and ask the professor another question. Was that information gathered with people's permission, or was it government powers that allowed you to collect that information?
I think in Taiwan, because we have experience from SARS in 2003, so I think at very, very beginning, very early, like January last year, so in Taiwan, we have a CECC. It's like a command center to control all the information from the execution unit. That's the top level of execution in Taiwan.
But is it with people's permission, or is this type of data the government has access to anyway?
So we have a type of we have some type of data government already access, like the national health insurance data, including your medical history and your if you come from foreign country, you also registered in that medical record. So in Taiwan, we have a authority that in execution unit can connect all the information in order to trace the contact history. But at the same time in Taiwan, because we are Taiwan AI Lab, we also develop a decentralized approach in order to, for everyone, they keep tracing their own contact history, but store in their own device, which means that if there's confirmed cases happen, then we can leverage the decentralized way to broadcast the device had ever been caused to them. So we developed a context social distance app last April and have a beta release at that time. And it became the open source technique for the government that deploy to all the institutes in Taiwan. They can leverage this open source content history infrastructure in order to trace the content history. So it's similar to like now we can see Apple and Google, they have the infrastructure leverage the Bluetooth device to trace the content. But in Taiwan, we developed this app in last February, then we deploy it in April. So we do it at the very beginning. And also in the NHI, National Health Insurance Agency, we deployed the system. We call this COVID-19 chest X-ray classifier. So in Taiwan, because all the hospitals, they file the insurance claim for the chest X-ray, it will file the medical image to the NHI, National Health Insurance. And then we put a AI classifier in this health insurance agency. So all the chest X-ray is not filed to the National Health Insurance Agency. It will run through this AI algorithm. Then if in this algorithm we detect there's a COVID-19 possibility, it will notify the CDC in Taiwan to trace this record. So through last January to last March, out of 109 confirmed cases, we actually can detect the COVID-19 before the PCR test, because at that time the PCR test was not available at any locations. Yeah.
Tomas, I'm interested. You're listening to what the professor and what Ethan just said, and Ivan, I'll be posing this to you next. But Tomas, to start with you, we're hearing what our Asian colleagues are saying. The centralized system, certainly we have a lot of that here in Europe, including in emerging Europe, certainly more than the United States, where I come from, where it's completely decentralized. So chest x-rays that Ethan is talking about, for instance, I don't think that certainly before a pandemic would somebody be tracking them. Are these models that we see in Asia that our colleagues are talking about here, are they really applicable in places like the emerging European countries? When you talk about big data, I think certainly there's a bigger drive toward privacy here than there is in the Asian countries. So how much can we really take from what they're saying and apply it here, given the different social norms and different government norms that we see between our two regions?
Yes, it's really the matter of price value ratio. So definitely this kind of centralized. So of course it has many benefits, but fortunately or unfortunately, it's up to how we see it. From the European culture, and the societies are not really capable to be part of this kind of centralized system. Of course, step by step we can achieve it, but that's important that we should draw somewhere the line, because definitely whenever we are talking about the reaction on pandemic, this kind of centralized operation, it's really helping. So that's a huge help. But in other cases, because we all know that implementing this kind of system is not just about taking care of the emergency, because if you're just talking about this, definitely it's a huge benefit. So it's a big question, that how can we make a balance between a centralized and, let's say, emergency focused system, because definitely personally I would really encourage this kind of implementation in Europe, or also in the US. But I truly believe that between the two kind of setup, there is a middle way, and it's starting with the harmonization and synchronization of the accessibility of data. So whenever we are talking about Europe and the European reaction on any type of emergencies like the pandemic, and also whenever we are talking about how AI can help in the healthcare systems, we need to have a much more unified data sets what we have right now. Because if we are just focusing on Europe, emerging Europe, we definitely have issues with that. We have, like GDPR, we have some central regulation which can help us in the further steps, but still we don't have the data pool, the unified data sets between countries, which can be utilized for further innovation and further cooperation in the reaction of emergencies and pandemic handling. So that's something we definitely need to do. And of course, we need to identify what could be the further steps in order to make a little bit more centralized operation. But again, I truly believe that we should find, and we should actually choose the middle way between those kind of two systems what we are living in right now.
And just a short follow-up, I'm going to ask Tomas and then Ivana the same question. But Tomas, just because you've been talking, I'll start with you. If you had to put us on a scale 1 to 10 of where we are with technology and healthcare, if you had to put Asia, I mean, I'm talking about countries like Korea, like Taiwan, which we know have done so well, and then places like the emerging European countries, on a scale of 1 to 10, 10 being the most technology, where would you put Asia? 1 being the least, where would you put us in Europe?
Wow, it's a tricky question. So I believe that Asia is somewhere 8, so 7 and 8, and Europe. So and again, it's a tricky question. Let me give you just a quick footer before I placing Europe on the scale, because availability of technology is somewhere close to the 7 in case of Europe. The utilization of technology, now that's a little bit lower than that. So I would place like 6 or 5, 6. So definitely the preparedness on the technological scale, we have a lower rank in my view compared to Asia, but this is mainly coming from the utilization of these kind of innovations.
I'm surprised that you actually put it at a 6. I was expecting you to say a lower number. Ivana, I want to ask you the same question. You look at all these countries so closely and the technology. Do you agree with Tomas? And if you disagree, no problem at all. Where would you rank our Asian colleagues, and where would you rank us here in Europe?
Yes. Okay, I can start with ranking. Definitely, there is a difference between EU and then emerging Europe. But I would say, and I would maybe put 9 for Asian countries and maybe 7 for emerging Europe. So Serbian government is definitely doing a lot of efforts, and it put as a priority digitalization and implementation of all the emerging technologies. And we truly hope that we will get to Asia to cooperate on the same level. But at the moment, I can say that it's crucial actually to start with events like this, where we can learn from each other, where we can see their experience. As they already mentioned, they had multiple epidemics, and the system is well organized, and we can definitely learn from them, from Asian countries, and then from probably other good experiences all over the world that showed us that during this pandemic. And talking about that, I would like to mention that we will, together with Data Science Conference and Cleveland Clinic, we will organize international conference 24th, 26th of August this year, to actually discuss all the experiences, learnings, and actually talking about health tech towards 2030. So I guess it will be very interesting to hear in more details experiences from all over the world, specifically from US, Asia, and Europe.
Ivana, I want to pick up on a nuance that Tomas mentioned. He talked about technology availability in emerging Europe versus technology implementation. When you hear about all the technology, and again, we have to keep in mind the social norms and differences in terms of privacy expectations. Do you think that even if everybody in emerging Europe were given on a silver platter the technology that Ethan, that our colleague, the professor was talking about, do you think that we would be able to apply them here in Europe? I mean, I'm talking about broader Europe because almost all of us, even here still in the UK after Brexit, we have to go by GDPR. Even if we had every technology available to us for free, do you think that we would implement them here in Europe?
I truly hope so. In Serbia, I believe we're on a good way. In the region of the Western Balkans, I think there is still a long time to go and to get there. And this is why it's important to actually learn and see, set the direction, actually where to go and what are the next steps in order to actually gather the privacy issues, the technological knowledge, the experiences, because it's not just one thing. Technology is there, but implementing them, implementing it actually takes a lot more, especially actually communication with the community, with the patients and citizens. So just putting also regulatory part aside, implementation, it would probably also take a while, and we see that with vaccination. We see that with other technologies that are already there and that could be used, but there is always this kind of gap that we need to work on.
John, do you think there would be social resistance? I mean, there is some resistance to the vaccine in the United States. You see it in many communities of color. You see it in a lot of white Republicans white older male Republicans who are supporters of Donald Trump. They're actually the community that's the most resistant to the vaccine. But when we're talking about resistance to technology, Ivana, do you think that people where you are would have resistance to some of these tools tracking, for instance. We heard Ethan and the professor talking about tracking people's Metro cards, tracking, for instance, their credit card information. Do you think there would be, or has there been resistance where you are to these types of measures from the government?
It depends, I guess. I cannot answer to that yes or no, but I can say that ethics of technology is another important issue. And, by including patients and citizens in all of these discussions, it will probably melt away all the doubts. And it will probably put their input and actually putting the targets and design criteria of what citizens expect. So in which cases they would actually use those technologies and where they would be fine with it. I'm sure there is a way, but I think all the linkages need to sit at one table and make a final decision for implementation of any technology, whether we're talking about vaccines or any other mode of technology.
I want to cross back over to our colleagues in Asia. And Professor, you talked about, for example, the ways that information is centralized, how you're able to track. But in terms of big technology, in terms of AI, in terms of big data, how was that implemented, Professor, where you were during the pandemic in ways that we hadn't seen before? This question is for Ji-Suk Chon.
So I have to say that in our past experiences, we had some shortcomings when it comes to big data and AI. I know that we often talk about using big data and AI in healthcare and medicine, but unfortunately in this COVID pandemic, Korea at the least was not able to leverage our big data and AI technologies. I mean, we did testing of about 8 million people, and there are about 120,000 confirmed cases. So this is a huge amount of data. But if this data had been accumulated properly and in a streamlined manner, then we would be able to do more diagnostics or epidemiological studies of this, do more testing, I think get more sense of the pathway of COVID. But unfortunately, the authorities in charge of disease control does not have enough. They did not have the wherewithal. Simply put, they didn't have the time or the mind power to focus on big data and AI in the midst of fighting against this pandemic. Unfortunately, in Korea, we have universal healthcare insurance, universal health insurance. So the health insurance authorities have that record of all of the citizens, and we have encryption technology as well. So hopefully, we can try to make use and step up our efforts on big data and AI this time around.
Why do you think that was, Professor? Why do you think that, given your experience, for instance, that you mentioned earlier with MERS, given how advanced that we perceive you in the rest of the world, because you've done so much better than those of us with the West, in Europe, in the United States, why do you think that the central powers didn't have that mind power the way you describe it, that they didn't have the tools or the time to do that? Was it just simply that that methodology is not in place, and will it be in place for the next pandemic?
사실 지금 한국은
In Korea, 10% of healthcare is provided by the public sector, but the remaining 90% is for the private sector. But the data is not unified for the private sector healthcare providers, and that is why there is issue of common data. But in the future, we could make a common data warehouse in order to implement utilizing of big data.
Ethan, I want to jump over to you and your experience. The same question, and picking up where the professor left off. I'm interested, what technology was used this time? We hear about the missed opportunities in Korea in places like Taiwan. What were the successes of using big technology? Was there big success with AI? Was there big success with some of the big data tools that you have at your hands?
I think we were very lucky because at the very beginning, when the pandemic happened, at that time we are collaborating with Taiwan CDC and malaria automated detection. So at that time, we already have a platform set up in the CDC, and we also have a platform set up in NHI. Therefore, when we respond to the pandemic, we can quickly implement the methodology and work together with CDC and the NHI to put together the solutions. So, for example, not only the chest X-ray system, we also deploy another system that actually every one of 5 confirmed cases, we have virus sequencing of the patient. So because we have the virus sequencing, we can actually trace the transmission of the virus. So these cases infected from which cases, it become the open and the clear approach that everyone can trace their cases because we leverage the big data, we leverage the system to add it to the pandemic very early, so we can have a more detailed methodology applied to the data, like a genome sequencing, then leverage the genome sequencing to trace the transmission of the virus. And later on, not only the centralized data we leverage, we actually collaborate. We call it Federated Learning Alliance. That is actually a alliance across 80 medical centers in Taiwan, which means not only the centralized database NHI, we have hundreds of billion medical record we have, but also we use a decentralized approach. If you look into like the way we do our machine learning technology, we actually respect the GDPR and we respect the privacy and the integrity because we leverage the instead of we pull all the data together into a centralized database in NHI, we now actually leverage the same protocol. So the data will stay in original hospital or the data will stay in their original personal device. But we put the same protocol to do the machine learning training. So in this case, we actually help to make our AI algorithm more robust over the time because all the hospitals, when they apply this AI algorithm, it actually train the data inside their hospital. The NHI don't need to pull their data out of the hospital, but it actually make the algorithm better and better. But then we aggregate the algorithm together to become the best algorithm across hospitals. So I think we are very lucky because we have this Open AI Research Institute fund in 2017. Then we collaborate with all the medical centers in Taiwan and put together this AI algorithm with the CDC and NHI. And before 2020, and at the time the pandemic happened, then we can certainly leverage our infrastructure to use in this pandemic. Yeah.
Tomas, I know you want to jump in, so I'll let you just jump in to add on to what what Ethan was saying.
Yeah, just one thing I would like to mention here that actually you used the example of white male Republicans. So I just want to highlight the importance of education. So that's also a factor we need to be really careful with because we reach the era, again, I'm using the word era, when we have so much innovation, so much technological new solutions that unfortunately sometimes societies, even professionals, cannot deal with. So actually they cannot keep up with these new changes what we have in our innovation culture. Therefore, it's really, really important now to little bit balance between the readiness of the professionals and the society and the available innovations. Because whenever we are talking about emerging Europe or the entire European region, we are also facing with the issue that most of our healthcare innovations are not not getting to the market because of the lack of knowledge or lack of competence, but the lack of entrepreneurship and lack of entrepreneurial skills. So we are not bad. So this is why I use, the ranking of 6, 7 in case of Europe or emerging Europe, because all the innovation capabilities are here, but we are not good at the moment in how to drive them to the market and how to think of a global scale.
Tomas, can you give me a tangible example of that, of a technology that should have been available, that was available, but because of the gap you're describing, just didn't make it to the market?
Oh, it happens actually 100,000 times actually per year. So because if you see that, so there is a CIMIT scale. So for instance, the CIMIT methodology is a really good, let's say, overview how this kind of difference is coming from the projects. So usually we are talking about, also if we are just coming out from CIMIT and thinking of technology readiness level, almost in all cases, the technology readiness level of each projects are higher than the readiness of their business competence. Usually, teams are coming from the ideation phase, so new technology innovators are coming with a team of researchers, doctors, but there is no business capability in the team. So this is why, for instance, EIT Health is also working year by year to accelerate hundreds of startups, to give them mostly, of course, not just business competences as knowledge, but mostly this kind of knowledge, teach them how to create actually a business from a research project, because that's sometimes a serious misunderstandings in young innovators, that they think about a research project. But unfortunately, and this is where the governments and EU can come to the picture, because of course they can fund these research projects and early stage projects, because unfortunately most of the cases investors will not do that because it's not attractive enough at that moment to have an investment. So this is where the government and the EU has a really significant role, but also they got a significant role to educate people how to make business from their projects. So I can actually give you 100, unfortunately, again, up to how we see it, but we can give you hundreds of examples like this.
I must say that Health Club is probably the best example, because in the Western Balkans region, this is actually the case. So we have huge technological background, but really the lack of funding opportunities, and that's even less than EU, and then also the business knowledge. And actually, this is why we created Health Club, to attract funding, to attract the ecosystem that can support development of innovations of this kind.
Ivana, I'm interested, and then I'll bounce back to Tomas after this for the same question. Where do you see, I mean, we're here to talk about the relationship, what countries in emerging Europe can take from Asia, what Asia can take from emerging Europe. Ivana, where do you see the most amount of technology innovation? Of course, I'm sure you see it right in your own backyard, so we'll say that's number one. But then number two, where are the real centers of health technology growth? Not necessarily what governments are adopting them the most, but where do you see the real innovation happening?
I must say there are several places, but I would probably pin out Israel. They're startup nation, so probably it's not only health, but we can see from the results of this pandemic as well that they're really leading this situation at the moment, and it's definitely based on innovations and startups. So definitely Israel, and I would say actually innovations are happening now all over the world, but probably they're not seen as equal in all places. But
and of course, that's one of the reasons that Pfizer chose Israel for their vaccination program, because it's a small country, it has a centralized system, and of course, hold on one second. I want to make sure my computer doesn't restart. Okay. That can happen live in these conferences. And of course, the ability to use their startups to make sure that they can track all this. Tomas, of course, I was expecting to hear Israel on the list. What other places, what other regions, where in Asia also do you see the most amount of innovation? You can name a few places.
Yeah, actually, so I totally agree with Israel. So that's why EIT has also an outreach hub in Israel, because we can learn a lot. But from the Asian region perspective, we're also running soft landing programs in Asia. So definitely Korea, Taiwan, of course. We are also having live relationship with China. And in my belief, we can learn a lot from each other. So first of all, of course, best practices. It's kind of standard term, of course, but we should be open for each other, because these, especially in these kind of global challenges like a pandemic, we need to share the best practices with each other. Also, whenever, for instance, Europe is ready to harmonize the data sets, of course, we are talking about anonymized or pseudo-anonymized data. I would believe that we can also share the data sets between the continents, because that can really accelerate the innovation and also the solutions for these kind of big challenges. So I believe that we are on the right track. And again, it's really hard to say something positive about this pandemic, but fortunately, more and more professionals and decision makers are aware how this kind of cooperation is important between the countries and between the continents.
That, of course, is a silver lining. We have just a few minutes left, so I want to cross back over to Asia. And Ethan, really, it's a similar question, though I'm wondering if the answer is different. The technologies that you're implementing, are they mostly Taiwanese technologies? Where are the major sources of innovation that you're adopting there? Where are they coming from?
I think at this moment for the AI innovation is a global innovation. For example, the chest X-ray classifier, we actually train the very beginning data out of the global open data. Then we innovate we make it better in Taiwan with the centralized database and also the federated database in Taiwan to make it better, and then we put together the classifier in NHI. So I think the innovation right now is not isolated from Taiwan from others. We work together with global. So we learn from the global, and we also make it better in Taiwan. But after we make better with Taiwan, because we are Taiwan AI Lab, we are Open AI Research Institute, we also welcome the global partner work with us and take our solution back to other country and see what will happen and what will apply.
We have just about a minute left, Professor Ji-Suk Chun, so I want to go over to you. Where is the major innovation happening? Of course, we know in Korea. Would you say majority of the innovation comes from Korea? What other places as well are you adopting this technology? Just 1 minute, Professor.
Well, I have to say that I am not an expert on medical innovation. I am a practitioner in the field, but I can say that when I go to Europe on business trips, sometimes I feel that the countries there, the individual countries are very innovative all in their own way, especially in the field of healthcare, but it doesn't seem like they are particularly collaborating very closely. So that was my impression in the past. But because we all know that there is going to be another pandemic down the road again, so if there can be a network of sorts where we can institutionalize cooperation among these different countries, I think that is going to be very helpful in the future, because we continue to degrade all of these ecosystems, and there are like 5 different infectious diseases that come out every year. And so if there are at least a network for hospitals or medical facilities, that could be its own form of innovation.
Professor, thank you very much. And thank you to our other panelists. It's really interesting to see what we can learn from each other, which regions and continents have been able to make strides, and where we can come together. I want to thank each of the panelists for coming from 2 very different far parts of the world, all here. Andrew, I want to go back to you, and I have to say it's really fascinating for me because, you know, at my time at CNN and in the coverage that I do now, what so much of it is talking to businesses. And what I heard here is that the same challenges that any company, I mean, I've interviewed huge mobile network operators, and their big challenges are centralizing data, practices across their smaller companies. And that's the same type of issue that we're hearing here, that's what we need: centralized information, big data banks. So it looks like this is a problem that can be solved between business and government and coming together, which is, of course, what this conference is all about, Andrew.
Yes, we need to be prepared for another pandemic in case it comes in the future. Thank you very much, Sam, for this session, and a huge thank you for participating to all the experts. And it was great listening to all of you. Now, the COVID-19 pandemic has hit fast forward on a number of trends, from e-commerce to workplace and city planning. In the next session, we will speak about how this short-term chaos resulting from the pandemic can bring long-term transformation and help plan and build efficient infrastructure to improve transport links, and what role technology, innovation, and sustainability will play in shaping the future of our cities. The next session will be moderated by Craig Turp, Editor-in-Chief at Emerging Europe. He will be joined by experts from the International Finance Corporation, WWF, and KDHC. Craig, over to you. I can see Craig is already with us.
Thank you, Andrew. Just waiting for panelists to join me. Thomas joining now, and there's Sergio. Okay, thank you, Andrew. Thank you, everybody. Good morning, afternoon, or evening, depending on where you are. A warm welcome to this, which is our final discussion of the day. But I can say it's certainly not the least, and I'm certain that it will be a fascinating, insightful look at how the emerging Europe region can take on board some of the experience of the Asian Tigers' career, in particular when it comes to improving infrastructure, which I think we can all agree is in most parts of the emerging Europe region one of the main factors impacting the region's ability to really make the most of its potential. But as well as looking at infrastructure as a means of boosting trade and communication and so on, we also need to look at it in the wider context of climate change and how we can create sustainable infrastructure. And I think that the first thing that we need to do is perhaps define exactly what sustainable infrastructure actually means. And then we're going to move on a little bit to look at how we can make it happen, which actors need to be involved, and how technology will shape it. So as Andrew said, my name is Craig Turp. I'm the editor of Emerging Europe, and fortunately I'm delighted to say that I've been joined by a wonderful group of well-qualified guests who will help me chew over some of these issues. Thomas Lubeck is with us. He's from the International Finance Corporation. He's Asia and Pacific now, but I know that he has experience in Emerging Europe, particularly in the Western Balkans and the Caucasus. Sergio Zhiduk is also with us. He's from the WWF. And again, he's now based in Asia, in Singapore, but he also has experience in the Emerging Europe region. And also Ki-Jun Khan, who is the General Manager of the Global Business Department of the Korea District Heating Corporation. So let's kick off. And I think that, returning to what I said in my introduction, I think that the, probably the most crucial, pertinent question is, how do we define what sustainable infrastructure is? Is it more than railways instead of roads? Is it more than solar panels instead of, gas boilers and in our homes? Or is it actually that simple? This is something that I think we should talk about. So Sergio, I want to come to you first, because I know that you have some thoughts on this. So how do you see it, not least when it comes to integrating, biodiversity conservation into infrastructure development, particularly through what I, believe is called, nature-based solutions and natural infrastructure. Sergio?
Hello, everyone, and thank you so much for the invitation. As Craig mentioned, I work for WWF for the Singapore office, although slightly remotely now. And with respect to infrastructure, we have a commitment to shift the way infrastructure is built and operated by 2030, so that 100% of all infrastructure development integrates science-based and inclusive planning, nature and climate risk, mitigation and resilience analysis, and applicable nature-based solutions. So I guess in a way I gave you first on a flavor of how we might go and tackle the definition of sustainable infrastructure. It's a fairly difficult topic to define. Every project it's different from one another and across geographies, and it may mean different things for for different stakeholders, whether you're an investor or a project developer, and emphasis may be put on different elements to define that across the project infrastructure cycle. I think what's really important to highlight is the opportunity that we have now to think about in respect to linear infrastructure such as transport links. How is that going to look like over the next 50, 100 years? We know that infrastructure has extremely long lifespans, up to 100 years. So what we construct now will determine whether we reach, for example, the global climate goals or biodiversity goals by mid-century or end century. So from this point of view, which provides a direction to tackle the definition of infrastructure, it needs to be low carbon. There's no other way. All the infrastructure that is being planned and built now, it needs to be net zero. And in fact, this is one of the criteria that we have in mind for an initiative that we worked called Fast Infrastructure, which I can explain later. At the same time, I think it needs to incorporate both the traditional types, so from energy to public transport to buildings and water supply and sanitation, but also natural infrastructure such as forests and landscapes and wetlands and watershed protection. And quite often, we as WWF, we do a lot of work upstream. We recognize that a lot of the potential to influence how infrastructure is delivered is to influence the strategy, the planning and its design phases. So crucial questions need to be asked when you assess infrastructure needs of a nation or a region, whether nature can provide those services in the first place, or at the same time, use a more systemic or alternative analysis. For example, if you look at transportation and you're planning to build a new road and cut through a new ecosystem, can you address that issue by looking at the root causes of transportation issues like congestion, for example. So I'll stop here for now. I think I've laid a couple of points that we can explore. Thank you.
Absolutely, thank you. Thomas, I saw you, nodding your head a few times there during what Sergio was saying. So I can turn to you next. As somebody who does, have extensive experience in emerging Europe, as I said, particularly in the Western Balkans and the Caucasus, but now obviously in Singapore, which is one of the most densely, populated places in the world. Maybe a little bit about the differences, or perhaps even the similarities between the two regions.
Sure. So thanks very much, Craig. Perhaps I'll begin just by doing a little bit of introduction to set the context of where I'm coming from. As you mentioned, I'm the transaction advisory manager for PPPs covering all the countries of South Asia as well as East Asia Pacific, working at International Finance Corporations. So we've got about 25 mandates in countries, basically everything from Afghanistan all the way to Fiji and everything in between, trying to help find ways to attract private sector into areas such as power generation, health and education, affordable housing, and transport, of course. So, as you mentioned, I was previously based in Belgrade, where I was the regional manager for Central and Southeastern Europe, covering Western Balkans, Poland, Romania, Bulgaria. I moved here to Singapore just last July. So, this event actually is really welcome for me, because although I'm very excited and happy and getting engaged here in Asia, I'm still feeling very nostalgic and drawing upon the experiences that we have I had in Europe. So I think most people know, but just very quickly, IFC is the member of the World Bank group that focuses on private sector development. When people think about the World Bank or World Bank group, usually they're thinking about this monolithic, large institution that focuses only on loans to government, when in fact, there's 6 different entities within the group. And IFC, of course, is working with the private sector in order to try and increase shared prosperity and reduce extreme poverty. I was nodding with a lot of the things that Sergio was saying, because sustainability and ESG is at the core of what it is that we're doing in the World Bank group. And in fact, if you just look at recent history, particularly on the climate and the carbon piece that Sergio has mentioned. Between 2016 and 2020, collectively as a group, we've invested 83 billion US dollars globally to finance climate initiatives in emerging markets. This is basically equivalent to about 34 gigawatts of renewable energy capacity. So the story continues, and earlier this month, in the context of our spring meetings with our shareholder governments, the board approved a new climate action plan, which covers a wide swath of different things. I won't get into details now, but we'll be increasing the amount of climate finance that our group is providing from 28% to 35%. We'll be doing far more diagnostics at the country level in order to try and map out where there may be opportunities for carbon upside, where countries might want to try to invest, and where their obligations are under the Paris Accords. So with the Paris Accords themselves, we'll be increasing the amount of all of our projects to 85% that are in compliance with it, going up to 100% in the coming years. So I did want to just break down and talk a little bit about the first question as well on sustainable infrastructure, and just kind of do it in a very straightforward way. Because let's break it down. What is sustainable first, right? Is it an investment, right? Or is it an action that consults and it takes into account really long-term stakeholders? So things like even labor, right? Labor being treated fairly in the construction of the asset. Resource efficiency, making sure that emissions are within acceptable levels for people as well as the environment. Are the communities, right, that are being affected in the area where the infrastructure is being built consulted and inclusive in that process? Big issue here in Asia is land acquisition and land settlement. You have people who, in the easiest cases, of course, it's the government who own the land, right? And then it can be tendered out in a PPP or another transaction. You've got private landowners, but then you also have indigenous peoples, commonly across different parts of Asia, that have informal land rights and are making their livelihoods from the events. This is big issue. But also, to echo Sergio as well, biodiversity and cultural heritage as well. I remember vividly when World Bank was doing the East-West Highway in Georgia, around a little town called Igoete, when they were digging out the road, they stumbled upon the most miraculous sort of find of like a 6,000-year-old sort of gravesite with different types of cultural heritage objects, and the work stopped so that all of these things could be properly collected and documented. It takes time and money to do that, but these things also have to be part of what goes into the sustainable part. As far as infrastructure, I think we know the obvious ones, the hard infrastructure like transport links, aviation, power generation. But increasingly from our side, we're thinking also about the soft infrastructure, right? The things that are really important like healthcare, stating the obvious in the COVID world, but also education, because this also is a very important resource for longer term as well. So maybe I'll stop there and we can bat around the topic.
All right, thank you. I'm going to come to you, Ki-Jun Khan, over there in Seoul now. I know that Korea district heating is, it's recognized as a global leader in the efficient development of energy and air pollution control, which is, an issue that, is relevant, obviously, both to Seoul and to many of the cities in emerging Europe. And it's certainly interesting from an Eastern European perspective that Korea, which is obviously viewed as a technology leader, is using district heating. And I say that because in large parts of Eastern Europe, district heating is kind of viewed as being a backwards technology because it's associated with the communist period. So, I'd just like to, ask you to tell us a little bit about, the experience of Seoul and how, the Korea District Heating Company is tackling the issues of, ensuring that people, can heat their homes, can, have access to hot water and everything, but doing that in a sustainable way.
Thank you for the question. That was a very good question. And I think we've been talking about climate change and sustainability and You've also asked me about what we are doing here in terms of going towards sustainability, what Korea is doing. I think that this issue, this topic of sustainable infrastructure, is very meaningful and very relevant. We are, as you said, a district heating corporation. And in fact, our corporation was established to respond to climate change. So if I were to respond to your question first, as you said, yes, the format or the method of district heating is a sort of a comprehensive group style heating. So this was used in the past, as you said. I think it started in the United States, but it was used prevalently in Europe in the communist era. And so in Korea, this was adopted in the early 1980s. At the time, it is relevant to the way that we use heat energy in Korean houses at the time. At the time, we use coal, sort of these coal bricks that were burned by people. And obviously, this led to a lot of pollutants and obviously led to a lot of carbon emissions. And so, because of that, the government engaged in two different policies. They started supplying LNG, first of all. And secondly, they used they tried to transform coal generation and heavy oil generation to LNG generation. And in doing so, they tried to find ways to increase energy efficiency in supplying heat to many people at the same time, which led us to adopt district heating at the time. And so this supply method of district heating, we in Korea we use it very extensively, but district heating is not just found in Korea. I know that it's also adopted in Serbia and Croatia, many CIS countries in Europe. So this is not something that is just Korea specific, yeah, and it's not something that is extraordinary. But we've been talking about climate change so far, and as you know, this Paris Climate Agreement, it's has been postponed again. It has not been renewed. And if the Paris Accords have been implemented properly and if countries have undergone these different climate neutrality targets, then they would have adopted renewable energies, hydro energy to try to come up with different net zero policies. And district heating can play sort of a bridging role in that regard. So actually, if we use renewable energy, let's say hydropower, and it takes time. There's a lag from generating hydropower and taking it to a place to replace coal energy. This natural gas power generation is going to last for some time because there's going to be that lag, there's going to be that delay. And also, when there is heat that is emitted from this, we can convert that heat in the process of a power generation in district heating. We can use heat pumps or etc. to use that in district heating. So there's all of these different networks in place to utilize district heating together with renewable energy to respond to climate change. And I know that UN is also looking into various measures to do so. So yes, in Korea, first of all, we brought in district heating on a massive scale, and I told you why we did that. But because we're talking about renewable energy, I also want to focus on that a little bit. Right now, we're obviously living in the COVID situation. And I think thus far we've been focusing on diversity and ecosystem and how we can create a global supply chain in a most effective way. We've thought that we've done a very good job with a very effective global chain. But after COVID, we've seen all of these value chains becoming fragmented and becoming broken up. And so we have to ask ourselves, what is the real thing? I mean, have we done a good job thus far? And I think that because we are at this turning point, this is going to be an opportunity for us to engage in sustainable infrastructure. And although I'm working in an energy corporation, I think that when we come to sustainability, and in the earlier session, they were talking about ESG. Sustainability and ESG are very closely intertwined. So when we provide public goods, because infrastructure, we think of it as a public good. And in ESG business management, more private companies would have to take the form of supplying some private goods as well. And there's going to be the need for government policies and goals to allow that. So some people say that even if it weren't for COVID-19, because many people want us to respond to climate change, we would have gotten there anyway. But I think that the direction has been really set for us because of COVID-19. And as an energy expert, I feel that we can come up with this sustainable infrastructure, this is going to be one of the key solutions for us to respond to climate change in the future. And so in the future, if there's a second COVID, a second pandemic, then at least the global value chain will remain resilient due to this good, resilient, sustainable infrastructure in place. So that is why I think that when I think of sustainable infrastructure, it's no longer this ideal or vision that we have in our head. This is something that is more concrete, that we can actually use to replace our current system to be more resilient against other pandemics.
That's great. I mean, that's a fabulous answer to my question, and the way that you took it forward was great. I appreciate that a lot. Thomas, I'm going to circle back to you now, because the IFC is obviously one of those organizations that plays a key role, whether it's finance or expertise, in the development of some of these major infrastructure projects that we are obviously going to need. So, perhaps from you would be constructive to hear about how these are best financed. What, in an ideal scenario, let's say, should the relationship between the private and public sectors be? How much do governments need to get involved? How much do they need to, stand to one side and let private enterprise take care of these things? What should the relationship be?
So thanks very much for the question. I'll answer within the context of, the things that I started to see and hear from our shareholder governments. So IFC is, of course, and the World Bank Group is, of course, a collective, 184 governments around the world. When the crisis first hit, obviously the primary concern was about, sick people overwhelming the health system, right? Their citizens were dying, right? And they had to immediately pivot in the initial term in order to spend money on healthcare, buying PPE, making sure that people were cared for. And then as time went on, it was clear that lockdowns needed to be part of the solution. People had to be, taken care of from the perspective of employment, right? And unemployment benefits, and making sure that people, had money to be able to eat. So what that did is blow out, huge fiscal deficits. It varied, of course, from country to country and place to place. I mean, certainly the countries in Western Balkans were not too well positioned on this one. If I look today now, I mean, because I'm also covering India, which is it's suffering now devastating sort of situation. The fiscal deficit last year was 12%, right? So with budgets under a lot of pressure, I think that there was two sort of thoughts about how private sector might be able to help here. So in the context of these constrained budgets and limits, one way is governments were starting to think about how they can be more efficient in the delivery of certain types of infrastructure. It's been slow going, of course, over the past year, but the introduction possibly of PPPs and concessions in order to ensure more efficient service delivery. But then also, PPPs and concessions can also be a vehicle to raise revenue, right? While allowing the private sector to operate an asset. So I think a recent example is, of course, Sofia Airport in Bulgaria, which, in spite of the COVID-related downturns in the traffic, there were still private sector investors looking to the longer term, 12, 24, 36 months out, to which traffic would be expected to improve. And there, the Bulgarian government, as part of the concession, was able to get good upfront fees as well as revenue sharing later on. So the role that IFC plays here, in fact, my group specifically, is we are retained by governments in order to help them think about where it might make sense to invite private sector in for PPPs and concessions. We help the government do the technical and feasibility studies for certain project types. We walk them through what different types of options could be possible with private sector, depending upon what variables it is that they're trying to optimize there. Then we can run tenders, help them to negotiate using international best practice legal documentation, and then get to commercial close and then financial close. Financing there can come from a wide variety of different sources. I mean, certainly IFC. On the other side of the Chinese wall, of course, from my advisory business, is providing all sorts of financing options to the private sector companies to complete the project finance and come. Also, I know certainly Korean Exim was a very big source of finance in some of the projects where we had Korean sponsors, including K-Water in the case of Nenskre, HPP in Georgia, which I think is still ongoing, but it's quite an important one where IFC was the advisor to the Georgian government. So, and many other sources. Honestly, Craig, I think these days finance is more and more commoditized. I mean, it depends again on country and in sector. I mean, we don't have a slam dunk in the case of the mandates I have in Afghanistan, I can assure you. But the scarce entity is a well-structured, sustainable, bankable project. Right? So more and more resources within IFC are designed to try and have that well-structured project where the risks are properly allocated between what private sector is best able to handle and what the government is best able to handle, and something that's market viable. So I'll stop there.
That's great. I mean, that's that leads me perfectly, really, onto asking Sergio about the he mentioned it in his introduction, as it were, the finance to accelerate the sustainable transition infrastructure initiative, which I believe is known as the FAST infrastructure initiative. And I have to admit that until yesterday, when you mentioned it in the pre-chat that we had, I'd not actually heard of it. So, it would be great if you could tell us, a little bit more about that and how it fits into some of the things that, that we've just heard.
Definitely. Thanks for that. That was very interesting to hear the fellow panelists. So I think this initiative, which actually the IFC is part of the group that established it along with HSBC and CPI, it's an industry-led public-private partnership initiative. And it recognized that public finance is not flowing in significant size to fund projects. In Asia, for example, about 20 or 30% of funding is private only for infrastructure and the rest is public. So we know that by 2030, about 90 trillion in US dollars will be required to fund infrastructure. And there is a massive gap, so roughly around 6.9, I think, trillion a year. And public finance alone is not enough because the MDBs and the national banks, they have limited balance sheet. So to overcome this hiatus, this initiative aims to increase the flow of private capital into developing markets for sustainable infrastructure. And it's got two main components. It's got a sustainable infrastructure label. This is linked into our discussion to the definition. So it's also, it's not really reinventing the wheel. It's using existing standards, existing frameworks. For example, it's looking at the IFC performance standards, for example, as a baseline. It's looking at the SureRe standards, SQL, and many of the others are in the industry. Across four sustainability dimensions, we have environment, where we talk about biodiversity, energy efficiency, and sort of circular economy, pollution, and climate mitigation. We have social, so things on labor rights and gender rights and so on, governance and adaptation and resilience. And it also includes an indicative list of assets that could be funded. So that's the label. But undertaking taking this further, the initiative also has is targeting financial intervention. So if I put my finance hat on now, I'm aware that the IFC in 2013, they created a managed co-lending portfolio program, MCPP, right, as the acronym stands. And essentially, institutional investors can participate in the emerging market loans that the IFC originates, and essentially creates a supply of high quality liquid assets for private investors. But I think the issue that this initiative that I'm talking about has recognized is that it's limited to scale because of its bilateral nature of having the originator within the institutional investors, and also a blind pool approach in a way because they take exposure to whichever loans the IFC puts in the program. So what this initiative is trying to do is to open up this area. So it's proposing an open source managed co-lending portfolio program, so OMCPP. And the difference to what the IFC has done is that it's a diversity of participation. A number and a range of development banks can originate the loans, as well as a number of institutional investors can align on the other side. So it pulls together loans originating for participating development banks and allows the institutional investors to access them through tranches of senior and mezzanine debt. So it reduces the risk exposure of private investors to credit enhancement, and which the banks hold the junior debt. And the final element in the initiative is a so-called sustainable financing facility for national banks. So it's recognizing that national development banks, they play a key role in financing sustainable infrastructure in domestic markets. And they are very important for a transition to a low carbon economy, of course. But they may have, they lack access to international capital markets. And this inhibits, again, their ability to scale their lending programs. Also, they are competing with other lending initiatives. So what FAST is trying to do is to set up this financing facility in which commercial banks or large NDBs can fund through this initiative the NDBs. So the commercial banks will take the NDB risk, and the NDBs will take the construction risk. And it's something that will develop over time. And actually, all initiatives, all components in the FAST initiative are not final. It's meant to be market-driven, and it will be adapted, according to how the market responds. And actually, right now we are in the public consultation, so there's an opportunity to influence how this is going. And in my final remark, I think the private sector still has a key role to play in setting the shape of the built environment. But I think what we need is to see more innovative private-public partnerships, and allow also for technology to come here as well, whether it is on the area of data and transparency and blockchain, and obviously allowing the technology folks to step in as well to innovate. Thank you. I'll stop here.
All right, that's great. You mentioned, the role of technology there, and if I can come back to you, Ki-Jun Khan in Seoul. Korea is obviously, world renowned for, its innovation, its technology, and the way that, it uses that. So I would be very interested in hearing from you, how Korea goes about, constructing and maintaining its infrastructure, which is obviously fabulous, pretty much across all sectors. What's the relationship like in Korea between, government, business, and, the public sector and the private sector?
First of all, I would like to say that after COVID-19, the Korean government has carried out activities to address climate change, and I want to give some examples for that. Due to COVID-19, the real economy faced difficulties, and in order to overcome this, last year in September, we announced the Korea Green New Deal and Korea Digital New Deal. And the content of the Korean Green New Deal and the Digital New Deal is that for the next 5 years, 20 trillion KRW will be invested to create a public-private fund to invest into green projects. And the various investment and funding methodology, it was mentioned, and that is why I want to briefly touch upon this. Last year, so we created this structure. So the public side will be investing 30%, and the remaining 60 to 70% will be invested by the private sector, and they will be investing in this way in order to encourage private sector participation. And we also have a fund in which the individual citizens can participate, and by allowing citizens to participate, they can also enjoy in the profit too. And innovation and technology of Asia. You mentioned this, but I think that Eastern Europe has competitiveness in service sector and in manufacturing, and the EU and in Korea we have net zero policies, and there are many projects and that are being developed there. And I think that if you have projects that combine the technology and like manufacturing in Europe, I think you can realize this. And the question was about the cooperation between the private and public sector. And on that question, in the past, compared to the private sector, the public sector led policies and deregulation took place in order to expand technology. So the private sector, they would not invest in technology that has risk due to the delayed commercialization. But these days, we see that the market is led by the private sector. The technology and innovation is initiated by the private sector, and the government or the public sector creates a public fund. They deregulate to support the technology and innovation led by the private sector. Therefore, I think the paradigm has shifted compared to the past. And since the COVID-19 pandemic, there is more that the private sector can do. And if we consider ESG, the private sector companies are now carrying out a bigger role, and we now have the environment or the conditions set up to enable this. And when I say that the private sector can do more, it is about the funding part. And we have been talking about funding, and is an energy company dealing with the Green New Deals. It is not easy to invest and participate in the emerging European market, especially when we try to enter into emerging Europe from Asia. We have a lot of concerns about entering into the emerging European markets. So we want to work with the commercial banks or also development banks of emerging European markets. So I think that they can play a certain role, and there should be a platform that can be shared with Asian companies. And I hope that we can collaborate more. Asian companies, for them to carry out market study and feasibility studies on their own, realistically speaking, it takes a long time, and in terms of the cost too, it is a great burden. Therefore, many developers in the local markets in Europe can help create more synergy for Asia and emerging Europe.
Okay, thanks a lot. You touched there on technology disruption in logistics, and I know that's something that that Thomas has an interest in. So, do you want to tell us what your take is on that?
Sure, with pleasure. Yeah, I mean the comments that were just made kind of triggered a memory when I was in Belgrade in March and April of last year. Just as the crisis was getting started with COVID, nobody really knew which way it was going to go. At one point, there was a hard lockdown of the borders and then a hard lockdown on people being able to leave. And I started to think to myself, wait a minute. I mean, some of the beer and wine I really, really like is coming from Croatia or Austria. How are goods going to be getting from point A to point B from now on? Is Serbia even self-sufficient in food, right? What's going to happen to us now? Of course, the worst case scenarios never came about, but with all that time in my hands in lockdown, I started to think a lot about these things. But from IFC perspective, we too have been thinking a lot about the emerging sector of e-logistics, right? Even pre-COVID. So let me throw up a couple of pieces of data. I mean, globally, the transport sector accounted for about 24% of global emissions. So quite a lot of scope right there for improvement. And if we talk about trucking, although the data is really scarce globally, but we know that in Europe, one study showed that about a quarter of the 1.62 billion tons of CO2 that are pumped up in the atmosphere were caused by trucks simply being empty, right? So being inefficient, taking goods, but not taking anything from point A back to point B. And then we also, realize that inadequate logistics contribute to high food losses, something in some countries up to 30 to 40%, versus 10 to 15% in OECD countries. So quite a lot of scope there for improvement. Generally speaking, as World Bank Group, facilitating trade and improving logistics, we know is essential to the important core goals that we've got, which is creating employment, eradicating poverty, and increasing shared prosperity. So this is a big area of interest. So from our side, there were three things that we wanted to try and focus on: increasing our investment and where we can, advisory as well. First is long haul delivery of goods, which of course I think is probably the most mature of the three sections I'm going to mention. Agriculture to markets, right? And then the one that's really gotten, I think, quite a lot of press these days during COVID is this last mile or sort of intra-city delivery, right? Where it's business to customer, or in some cases, business to business as well. And it's here that we started to look to those companies that are really using technology to disrupt the existing sort of markets. It was incredible for me to see how much artificial intelligence can be used to optimize routes or schedules, or to have meeting points so that there's not empty trucks or delivery, to increase efficiency. And also, we find there's much that can be done as well with this last mile in particular. This is really the most complex. COVID, of course, has increased the amount of demand for food delivery and grocery delivery because of people not being able to go to restaurants, of course, or just wanting to keep social distancing with others. So at the same time, customer expectations are extremely high on this one when it comes to delivery times and quality. I can tell you here in Singapore, there's no less than 3 or 4 different apps on your phone that you can go to to have these things. And if the food is not there, or what you ordered is not there in 30 minutes, you're feeling disappointed and already calling the customer service to complain. In this intra-city or last mile delivery as well, it's extremely difficult to predict delivery and supply and demand. So those companies that are using big data to sort of analyze the trends in a city or a neighborhood, or even at the individual level, are going to be the most nimble and able to respond. Big issue as well is how does one company optimize the delivery fleet during downtimes, because you need to have capacity that meets the peak. What happens later? And by the way, since we're talking more broadly about the issue of sustainability, which includes labor as well, in many countries, workers who are involved in these sort of gig economy operations, where there's an Uber for motorcycle delivery, or there's an Uber for trucks, contract architecture, right, and protections and insurance and social benefits is also very, very important to be sorted out. So with the individual delivery as well, packaging is much less efficient than with bulk cargo. So you have to look at the sustainability of those issues as well. Maybe thinking longer term, and again, I don't know how long it will take for this technology to be implemented, but even drones, right, are being used for certain types of delivery. And for long haul, I think there's different data on it, but even unmanned sort of trucks or things doing those things rather than people being part of the answer as well. So we're looking at companies that are involved in all of these changes, but in particular, cracking this last mile delivery is one where there's a lot of disruption and a lot of activity. So thank you.
Thanks, Thomas. Sergio, a very brief last word from you on this transport issue.
I think you're on mute.
I think just in regards to Eastern Europe, and transport. We've seen from the European Union that there's a high bet being put on rail, right, on electric rail. And I think this is something that in emerging Europe, the rail infrastructure is still fairly poor. In Europe, I think more than 2/3 of freight is done by road. So this is the direction of the New Deal, that's targeting sustainability and sustainable transport. So I think hopefully we can see more collaboration, especially with the Far East and Eastern Europe regarding know-how and funding those electric rail projects that are very much required, not just across the East-West axis, but also across the North-South axis in emerging Europe. I also agree on all the innovation that Thomas has mentioned. I think if I can move this very slightly to the city area, we've seen through COVID that public transport operators have suffered a reduction in their revenue. People are, have been scared to use public transportation. Some people have moved back to using, walking or a bicycle, which is great. But some people have also went back to using their private cars, in a way incentivized by lower oil prices and also more aggressive marketing policies from car manufacturers. So I think the governments here need to pay very close attention in designing their policies so that they can harness these drivers in a way that they will deliver the kind of infrastructure that we'll need in cities. So if it comes to cycling and walking, which is something that it's not necessarily very much developed in Eastern Europe. I know, for example, cases in Romania. I think COVID-19 plays a fantastic role to catalyze on these changing mind shifts and trends in the population and consumer behavior to deliver that necessary transport infrastructure in cities that we need and in between cities. Thank you.
All right, that's great. We need to wrap up there. We've run out of time, unfortunately, because this is a wonderful conversation that I would have been thrilled to carry on for a lot longer. So thank you to all three of you for joining me today. I'd also just like to say thank you to our interpreter in Seoul. I'm saying that because many years ago I used to be a simultaneous interpreter myself, and I know what a difficult job it is. But you've done a fantastic job today, so thank you very much indeed. Thank you to everybody who joined us today, and I will hand you back to Andrew in the studio in Warsaw.
Thank you very much, Craig, and a huge thank you to all the experts for the insightful discussion. We could hear that there is a lot of opportunities that the COVID pandemic has created in the infrastructure area. I hope you enjoyed these 4 sessions today and today's key platform conference as well. I would like to thank the team in Seoul for putting it together and joining us on this occasion. Thank you to everyone for joining the Emerging Europe and the Asian Tigers Towards 2030 program, which, apart from these discussions, includes a survey and a report. Follow Emerging Europe to access a copy of the report and the findings of that survey that was carried out prior to the conference, and enjoy tomorrow's sessions at the Key Platform Conference. Thank you very much and goodbye.